Learners. This is Shashi Ramachandran. In my previous video, you learnt about accounting as a process. Accounting as a process of communicating financial information about a business entity to the users, such as shareholders, investors, and managers. The communication is generally in the form of financial statement that show in money terms the economic resources under the control of management. The art lies in selecting the information that is relevant to the users and is reliable. The principle of accountancy are applied to the business entity in three division of business of practical art, naming accounting, bookkeeping, and auditing. So in this video, we are going to learn more about the concept of accounting, that is bookkeeping versus accounting, and also we learn about objectives of accounting. Okay, now uh, accounting process you are aware of: identification, measuring, recording, classification. This, these are done throughout the year. Then there is at the end of the year, summarizing, analyzing, and interpretation and communication. Now, identification, measuring, recording, classification, these are the functions or the steps of process which are throughout the year, means which we do throughout the year, that to identify the everyday's transaction of financial character, recording it into the journal, and then posting it into the ledger. Okay, so this is termed as bookkeeping. And then summarizing, analyzing, and interpretation, communication, these are termed as accounting. So accounting is basically, you can say it's overall it's accounting. So accounting includes the bookkeeping. The first stage or the primary stage is called as a bookkeeping, and along with this bookkeeping, accounting also includes this one, this last three stages, which is basically the analytical stage, means where the professionals are required to like to prepare the final accounts or to analyze it. Okay, so now we are going to understand the basic difference between the bookkeeping and accounting. Let's proceed. Distinction between the bookkeeping and accounting. So, as a scope, you know that bookkeeping includes the first four steps, that is, identification of a financial transaction, measuring the financial transaction in terms of money, recording the transaction in the books of account, and classifying the transaction. So these four steps of accounting process is termed as bookkeeping. On the other hand, accounting includes the processes in addition to. So bookkeeping is a part of accounting. So in addition to that, summarizing, analysis and interpretation and communication of the financial statement to the various users. So we can say that bookkeeping is a primary stage and accounting is a secondary stage. Of course, accounting depends on bookkeeping because all the datas are collected from primary stage or a bookkeeping, then only it's the like it is shown or presented in a in the form of financial statement. So accounting begins where the bookkeeping ends. So once the data are collected from here. Okay, now as per the nature of the job, that it's a routine type or a clerical nature work. Routine type because every day uh, the transactions, money, financial character, financial transactions are recorded in a book. So book of account, or you can say in a journal, and based on the accounting rules, and they are then posted to ledger. But this is something analytical where you need a proper knowledge of accounting, the principles, the act, the changes, how to maintain the accounts. Okay, you have to follow all these uh, accounting law, everything you have to follow here. Fine. Moving to the next objective of bookkeeping. Now the bookkeeping objective is simple: to maintain the account, or you can say maintain the record in a systematic order. Why? Because every time in a journal and ledger we record it in a chronological order, so in a systematic way we record financial transaction, that is bookkeeping. But accounting has an objective to calculate the profit and to know the financial position of the business, so profitability and a financial soundness of the business, and also to communicate to the end users. Okay, so the accounting has an objective which is broader than bookkeeping. Moving to the next one, performance. So here this performance, junior staff, you can say that the one who's having the knowledge of accounting, accountancy rules and all, can maintain the bookkeeper, can be a bookkeeper. For example, after 12th standard, even after 11th standard, you can be a bookkeeper. Okay, you can manage your father's business account at least at a junior level, like a recording and a classification, posting to the ledger and all. And senior staffs are required for accounting function. Here the work is mechanical. You can say the same thing, that repetition is there, same routine job is there. So mechanical nature, a normal skill is required. But here it's a specialized skill. One has to be a chartered accountant, auditor. Okay, one has to be the person who studied this law, company law, auditor. Now auditor is the one who audit actually the transactions which are recorded in the books of account. They are supported by some support document, say voucher. For example, if, when you buy raw material, when a business buy raw material from a supplier, they get a bill. So bill, receipt or vouchers are the supported documents. So auditor is the one who cross check whether all the transactions are supported by some source document or a supported document. Then he approves that all are authentic. Okay, then the work, the chartered accountant seal is required on the final accounts of the business, that is profit and loss account and a balance sheet. Then only it is considered as a authentic, okay, legal. And then the last point says that analytical skill, in this case since it's a normal skills required, analytical skills are not required. Here it's analytical skills are required. So you can club these 2 points together, but I have written it separately. If you get something, questions related to which one requires the analytical skill or normal skill, so these are the one. Okay, I hope this part is clear, bookkeeping and accounting. Now we'll be moving towards objectives. Objectives of accounting. Now accounting, since you know that it records, the first and foremost objective of accounting is to maintain the records. So maintaining accounting records here means the steps which are followed: journal, then ledger, and then financial statement. So maintaining record, like every day, recording it in journal, posting it into the ledger, that is classifying according to their nature, and then finally preparing the result. Okay, so the main objective of accounting is to keep a complete and systematic record of financial transaction of the enterprise, and it is like further classified, posted into ledger and summarized in the form of financial statement, income statement and a position statement. Okay, then accounting also helps in ascertaining the profit generated or loss suffered in the business during an accounting period, and this is done by preparing trading P&L account, or you can say income statement. So either the income statement, see I am repeating this, financial statement are two: income statement and position statement. Income statement is also known as trading P&L account. When you do the practical part, you will be writing trading P&L account, you will be preparing profit and loss account. Okay, and income statement is something like this is called as a statement. It's an income statement which gives you the result of profit or loss suffered by the business. Okay, so trading account basically reveals gross profit, and profit and loss gives you net profit. Okay, and ultimately the profit of the firm is after meeting all the expenses and income. Okay, then the moving to the next point, it also determine the financial position of the business. So objective of accounting is also to determine the financial position of the business. The balance sheet is also prepared to know the financial position of the business. It depicts the position of assets, liabilities, or you can say the capital of the proprietor. What is the investment in the business? What is the liability? Liability means responsibility towards outsider, what they have to pay outside. For example, bank loan is a liability for the business because they have to pay it back. Okay, any amount which is due, that is to be paid back, or any amount which is say your credit sales. So credit sale, the customer will become your asset. Why? Because he has to give you money. So balance sheet maintains what you are going to get in future and what you have to pay in future. So that is balance sheet. So it actually tells the financial position of the business. Okay, or you can say amount which is to be received, amount which is payable, and the stock what you have, the position of the inventory or the stock. Okay, position of loan, position of capital. So that is also determined under this financial position. Okay, so beside that, the next is it also, okay, another objective of accounting is to provide accounting information to the users. Fine. Providing here accounting information means the end users of the accounting information are shareholders, bankers, financial institutions, mm, your suppliers, those who have given sold you goods on the credit basis. Okay, then management or a manager. Okay, so the analysis and interpretation, the financial statement is done to suit their objectives. So basically, the information, accounting information are analyzed and interpreted, and then it is communicated to the user. So this is also one of the objective of accounting, that they have to provide the analyzed information to the users. Okay, and users, or we can say interested parties, or they are also called as a stakeholders. Why they need this? To take a important decision. Okay, last but not the least, objective of accounting, that is it facilitate management. Now facilitating management here means management also require financial information for, of course, decision making, and also for exercising the effective control. Okay, accounting basically provides the information to the management so that they can plan for future, they can take effect decisions of future, and also can have a effective control over the things, because unless and until they know the data of the firm, like what exactly the firm is earning, they cannot plan for the next thing, that whether to increase the sale or to reduce the cost, so what strategy to be used. So they can take a decision only if they are very clear, means when they get the accounting information from their books of account. Clear? Okay, so this was the topic of today, and I hope you like this video. Share this video with your friends, and do subscribe to my channel Exuberant Learners. Also click on the bell icon to get the latest updates on my channel. Thank you.